Welcome to our Fast 5 series in which we touch upon 5 key questions that are on top of investors' minds. In the 4th episode, we welcome Nishant Vass, Fund Manager, Listed Equity, IIFL Asset Management. Hi Nishant, great to see you.
Glad to be here.
Shall we begin?
Sure.
The global interest rate changes have been in the news for some time. What are your views?
Yes, the markets are definitely keeping a close eye on the global situation, both on the inflation side as well as on the interest rate side. The labor data coming out of the US has been very strong. This, coupled with sticky oil prices, are again renewing fears about inflation trajectory. Now, on the other side, the US Fed continues to be extremely hawkish, and the prospects of higher for longer interest rates are extremely possible. Back home on the domestic side, clearly you're seeing inflation in India being at a much better level vis-a-vis the rest of the world. However, RBI needs to play a careful act on the interest rate differential side, which is sitting at 17-year low at 175 basis points. What is interest rate differential? Basically the difference of rates between India and US. Thus, in the short term, markets are likely to be closely watching the bond yields as well as the rupee behavior.
So what sectors are you optimistic about?
On the sector side, we've liked financials, industrials and autos. In the previous series, we've talked at length between the financials as well as the industrial side. So we'll spend some time on autos. On the demand side, the Indian automotive market is the 3rd largest in the world. Great news. However, if you look at from the penetration standpoint, we are actually quite low vis-a-vis rest of the world, which provides more headroom for long-term growth. Just to put it in an example, passenger vehicles, the Indian penetration is at a meager 24 vehicles per 1,000 people, which compared to any EM in the rest of the world is less than a sixth. On the supply side, the PLI initiatives are focusing on new energy initiatives like electric vehicles. This is likely to act as a catalyst for high-end, high-quality manufacturing across supply chain, across finished vehicles on electric to cells on both lithium and hydrogen.
Could you highlight one key investment process for us?
One of the interesting investment processes that we follow to identify potential discrepancies or frauds is based on Benford's law. Benford's law is an interesting law which talks about how to identify potential anomalies in large data sets. What it basically says is, in naturally occurring data sets, the numbers should start with smaller digits more frequently. Specifically saying, the digit 1 should occur 31% of time, while the probability of the digit 9 occurring should be only 4%. So what we do, we take all the listed universe data set and run it through the Benford's law. We even do for that for the IPO companies. And then we try and identify potential discrepancies or red flags.
What's your view on the current market valuations?
For market valuations, we tend to focus on price to book metric. What we've realized over seeing the data for the last 2 decades, that the market oscillates between 2 times price to book and 4 times price to book roughly 85% of the time. Currently, the market is at 3.3 per times price to book, which is just at a 10% premium to its long-term average. So the valuations seem palatable.
Finally, how should investors navigate the current market?
Short-term volatility aside, the Indian market remains a premier destination for bottom-up stock picking. The number of compounding companies above 20% in India for the last 20-year time scale or 10-year time scale is amongst the highest in the world at 30% and 20% of the BSE 500 respectively. So simply put, invest consistently for the long term is the right strategy.
Thank you Nishant for this insightful Fast 5 discussion. We look forward to hosting you again.